Ladies and gentlemen, boys and girls, welcome back to another terrific episode of All Things Litigation Funding. I'm your host, Ted Farrell, but more importantly, we have a terrific guest today, Boris Ziser, widely recognized as really one of the top transactional lawyers in the space. We're going to talk about what it means to be a transactional lawyer in the space, the kind of deals they're seeing, how we built the team, thoughts on the market. But before we get into that, Boris, first of all, thank you for being here. And if you wouldn't mind, just give everybody sort of like a brief background of you and where you're coming from.
Sure. Ted, thanks a lot for having me on. I really appreciate it. I don't know how far back you want to go, but I can go back pretty far.
High school is fine. Like I don't need eighth grade. High school's good. High school debate, I guess, right? Yeah.
Yeah, that's fine. I can go back to high school. So I wasn't born in the U.S. I actually came from Ukraine with my parents when I was a little bit shy of my 9th birthday. And then skipping to high school is when I realized that I didn't really love math or science, so I couldn't be a doctor because I figured those were two things I probably would have at least.
Those are two of the big ones.
Yeah. So,
do you like blood or not? Do you like the sight of blood?
No, particularly, certainly not my own.
That's a big one. Yeah.
So I said, maybe I better do something in the humanities. And ultimately decided that the law might be a path. And so I did my undergraduate work, not in pre-law, but basically humanities, right? Liberal arts, humanities, education. And I worked my way through college and then law school and joined a structured finance practice in New York. And I wasn't as thoughtful about this as the sort of younger generation is today, where they agonize over this practice or that practice.
What practice group they're going to?
Yeah, that's right.
To me, antitrust M&A or antitrust investigation.
To me, it was corporate and litigation. Those are the two things. That was the entire universe. I didn't want to do litigation. Corporate was corporate. I didn't care what it was. So I got an offer to join the structured finance group at what was a large firm at that time. And that's what I did. And ultimately, I did a mix of esoteric finance or non-commoditized finance, and also some of the more traditional asset classes and commoditized asset classes. And then over the years, I migrated just to focus really on esoterics. And litigation funding became, over time, a meaningful part of that. The way I actually got into it was really by accident, in a sense. I mean, I was very active in another asset class called life settlements, and I don't know if the audience has heard of it, but there's basically a market for buying and selling.
Are you going to be on my life settlements podcast too, or no?
I'm happy to. We're still very active.
It's a crossover episode.
That's right.
Episode.
No, that'd be a lot of fun. That's right. And it's buying and selling life insurance policy on various insureds. But in any case, we had a client in that space, which was a hedge fund, and this was 22 years ago at this point. And after we did that deal, they came and said, "Do you know anything about litigation funding?" I said, "No." They said, "Can you learn it?" I said, "Absolutely."
Yeah, of course. Yeah.
And that was my first litigation funding deal 22 years ago. It was actually on the consumer side. There was what we colloquially call a preset deal, but basically small ticket advances to jury claimants. And that was my first deal.
I was actually going to joke that it's up on appeal, but there's a really good chance it's going to get remanded for trial next year, from 23 years ago. So
the consumer side turns pretty quickly, but that was funding a specialty, representing a funder to a specialty finance company that made those types of investments was my first litigation funding exposure in 2003.
Right. Yeah, that's interesting. And so, the business has obviously changed here. But, one of the reasons I wanted to have you on is, most of what you see publicly, on these kind of podcasts or people writing articles, there's sort of three groups, right? Like some lawyers who use funding are open about it, but it's mostly either insurance brokers or funders. who are, kind of like the thought leaders in the space and talking about, why we should use funding or why we should use insurance. But, you are a lawyer, but you are not here to talk about how you leverage this money for your litigation. You are actually putting these actual deals together, allocating the rights. And look, there's less time, spent on this in like the public discussion of the business, but obviously in every deal, we need those. And so I'm just kind of interested in, people probably know maybe in the business, but I mean, you guys have a real group doing this, right? You're not just a solo doing this. So at some point at Schulte, this grew. And so I'm interested in sort of how you built this into like, and by the way, not a practice group like we say we do 900 things on the website, but like you have like full-time practitioners doing this. And so I'm interested how that came about, how you put that team together.
Sure. So we have about a dozen lawyers across all seniority levels, partners, associates, special counsel, of various vintages, doing litigation funding, if not full-time, a lot of the time, vast majority of the time. There is really, candidly, probably not a day of the week where we're not in the middle of a half dozen, if not more, litigation funding transactions. And so we grew the team because the business grew. And the thing about us is that litigation funding is a big part of the practice, but it's not the only part of the practice. We cover all sorts of esoterics, whether it's life settlements, like I mentioned, or structured settlements, or medical liens, or lotteries, or timeshare loans, or equipment leases. And we cross-train all of our people so that they can use technologies they learn in one type of deal in another type of deal. We don't have anybody in our practice who only does one type of deal, because we think you just become a much better lawyer if you have exposure to.
Because you just have to think, what are the issues here? Yeah.
What are the issues here? What have I done in somewhere else that I can now apply here, or solve a problem that's coming up in this deal? And if you haven't seen a broader array of deals, you're just not going to have that same perspective. And so, but in litigation funding, from 2003, when I did that first deal I mentioned, to 2015 or so, it was really sort of very episodic, right? Like it some years we'd have a bunch, some years not so much. And then at around 2015 or so, it really took off. And so as we built out, not only in this asset class, but in other asset classes, we hired and trained a lot of the people on our team have been with us for years, sometimes from their first day they started practicing law, and sometimes we were able to hire them, laterally, and they learned the business and the deals with us, and have become really, really great. And so, so now we have, I don't know if it's true, but I'm guessing could be certainly one of the larger teams, if not the largest team, that's focused on the litigation funding space. And we do both, by the way. We do the commercial side, whether it's mass torts or single event or portfolios. We also do the consumer side. The first deal I ever started with back 22 years ago, we still are very active on that side of the business.
So, one of the things that I think is interesting is as these deals have just gotten bigger in dollar size, there's a lot of loans that are either going to be participated out pre-closing or post-closing. And you have, if one sophisticated party is doing it, they have 800 really good questions to ask. And then if you have 4 sophisticated parties. So I'm sort of interested in, what is it like trying to be counsel to a syndicate? Like, what are the dynamics of that, right? So, like, how would you, like, what are best practices for saying everyone's going to have their own questions, but we're all signing the same document? Like, I mean, how do you, you know what I'm saying, right? Like, how do you sort of attack that situation?
Well, I think one thing that we always like to do, particularly if a member of a syndicate hasn't done a lot in the space, which happens sometimes. We have new entrants into the space all the time,
Always. Yeah.
is to make sure they understand the dynamics of the business.
Right.
I'll give you an example. Um, for example, we've had situations where an investor who's new to the space is surprised that a law firm to which the loan is being made, in which they're participating, doesn't have audited GAAP financial.
Oh, audit financials. Yeah, it's so fun. It never happened, right? Yeah.
But the truth is that's the cohort. Law
Custom.
firms,
Yeah.
particularly um, plaintiff side firms that don't have a lot of principals, they typically won't have audited GAAP.
Or they might own 100%, and whatever's left just get reported on their 1040.
They're
They file.
right.
Yeah.
They're fantastic litigators. They're really successful at what they do, but they're not a capital markets finance company, so they just don't have it. And so you have to try to marry kind of the expectations, or at least manage the expectations of an investor who might be accustomed to a certain type of deal or a certain type of diligence materials and the like with the reality of the business. It's also not uncommon for principals at a plaintiff's firm to have all sorts of personal things going on. Sometimes they might be intertwined with the firm. Sometimes they might have made loans to the firm or funded the firm. That's not uncommon, but in a commercial context, that would be very unusual, right?
And so it would
another company.
And so in other businesses, it would be a real red flag, as opposed to this is actually a customer. We want to look at it, but the fact that it's there alone is not a thing.
Right. Or what you often face, for example, as you know, Ted, we often deal with co-counsel agreements or referral agreements, right? And it's not uncommon in the business that those are very short. They're very short. They're very thin. There's a relationship there. So if someone
or it's by handshake, and it's handshake and email. Hey, Boris, you gave me these 50 cases. Thank you. I'll pay you half. And by the way,
yes, we've seen that too, and I understand that might be a bridge too far for many. But the notion that you're going to have a 20-page referral agreement is really not the business. It's just not the way the business works. And so there's an education process, sometimes, and we have provisions in these documents that we like to have that deal with things that can happen in this business. They're different from what we might have if it was an equipment lease financing or
because there's nothing to foreclose on, and I think that's the hardest part.
It's a different business. So you have to you have to get the syndicate to understand how this business works versus what they might encounter in other investments that they make.
Right, and so and we've talked about this a lot, but I think a lot of these syndicates have now expanded in sort of attraction due to the use of insurance in these deals, and the principal is protected, or part of the principal is protected, and you and your team have probably papered many of these. So I guess what I would really ask you is, do you see, where do you see the insurance markets going? And what types of deals do you think the carriers are going to be sort of looking to, be in, just from sort of where you sit?
So I do see, and I'm expecting that the insurance business will grow. The question is how. I think these days, based on various litigation experiences, as I'm sure you've seen, I think insuring single event risk is not so easy.
I agree.
Right, and it's not so easy. It's not so cheap. But insuring a portfolio, insuring a docket, right, a law firm's docket. I think that business has grown. But I think beyond that, though, I think companies are on their way. Some have become already, but I think others are probably underway to becoming a vertically integrated space. It's not uncommon, for example, for there are private equity shops, for example, that own insurance companies. And so I think that type of integration where you have a funder that also in the family has an insurance company.
Right.
That might in the family might even have a servicing business.
Or they might have an insurance brokerage. So they can charge, so they can get paid to.
Yeah, you might have an insurance brokerage.
For sure,
have
yeah.
some outsource. You might have a marketing company, and so I can certainly see companies growing in a vertically integrated type of way. So I think and insurance I think will play a big part in that.
Right, and it's interesting because what you were saying is that you think the insurance on the binary risk is too expensive. My sort of comment on it would be, I think some of the insurers were not charging enough for the risk they were taking.
I didn't say it's too expensive. I just said it may not be so cheap.
Not so cheap. Right.
So cheap. I'm not saying it's too expensive. You may be absolutely right. It might not be expensive enough for the risk in any particular case.
Right.
That's certainly possible.
Right. And so let me ask you this. So we have on sort of the one side, we have these, large syndicated loans to law firms with huge dockets, or you have insuring a huge portfolio and then maybe the funder using that as leverage to take some credit money down on top of it. I kind of see that the business is going two ways, and the single case risk business is almost a different business than what we're talking about with the large syndicated loans, different risk, different return profile. But what I do think is you can really make attractive returns because you're taking real risk. And so I'm sort of interested in your thoughts on if those are almost because people are always saying consumer litigation is so much different than the commercial, which by the way, no, I agree with that litigation, but it's almost like law firm lending is different than we have a one-off trade secret case that we want to bring.
Yeah, it's all true. I mean, the consumer side is different because your diversification is just completely different, right? If you do $100 million credit facility or securitization, which by the way we do in that space, in the consumer space, that $100 million deal might have 15,000 completely unique advances across 15,000 completely individual litigations. That's a lot of diversification. You get current coupon and the like. Whereas on the commercial side, those financings oftentimes pick because it's much more episodic in terms of realization on those cases.
And it doesn't work. The other way, you just have to lend them an interest reserve to pay yourself back anyway. I mean, that's the way the cash flows go.
If you wanted to do current coupon. But I think the single case risk is not going away. I just think it has to be for somebody who can underwrite that risk. Like, for example, we have clients for who we represented in funding cases, I think almost on every continent except maybe Antarctica. And you have to be able to underwrite risk for a case in, whether it's in Asia or in, Eastern Europe or, in Africa or South America. The court systems are different and dynamics are different, and you have to be able to as I said, underwrite that risk. Not everybody has the ability to do that. Not everybody has the investment mandate from their capital.
I agree for sure.
But I don't think that's going away. But you're right. It's a risk reward situation as well. Your potential return on that transaction is very different from your loan to a law firm that's secured by a very diverse docket of mass tort cases.
Right. And what I think is so interesting about that is the pitch for litigation funding, 5 years ago, even when I was at Bannon, was, we're uncorrelated, but we are shooting for these super high returns.
Yeah.
And in the law firm loan, it's a lower risk, private credit transaction that you can charge more because there's nothing to foreclose. So I'm saying like it's single case risk doesn't really compete with anything. That's just like its own different business. And private credit dollars, can, compete with real estate transactions and stuff like that. So I just think that's sort of an interesting little striation in the business.
That's right. Yeah.
All right. So let me ask you about another thing, because everyone has been talking about the ABS structure in Arizona. I would have to guess you all have been deeply involved. So I'd say we're a year or two in. First of all, what do you think is the state of play with how the ABS experiment, has been going? I think the fact we haven't heard a lot about it means that we haven't had a public blow up yet. But I'm just interested in your kind of thoughts on where we are now, versus maybe where people thought we'd be.
So you are correct. I'm not aware of a public blow up. I don't think I'm aware of a private blow up. Right. So to me, I think this experiment has so far gone quite well. I think that one of the criticisms, which I just think is so wrong of this business, and I think it might apply particularly to the Arizona ABS construct, is that all of a sudden non-lawyers are somehow running cases and influencing cases and the like, and it's the Wild West because it's unregulated. But that's just not true, right?
It's so regulated, and everyone has skipped the compliance officer, and that part has been
not only that, but you have the ethics rules, and people say, well, so what? Well, that's really not a very credible response, because what you're saying is that a lawyer whose entire livelihood depends on actually being able to practice law is going to do something nefarious and risk losing their license and their entire livelihood just because of some financial pressure. And now it's interesting that they think, well, there's this financial pressure, but honestly, is that really new? Lawyers have houses with mortgages and all sorts of obligations. This isn't new. Lawyers are people like anybody else who live lives and borrow money to pay rent and or buy an office building or whatever it is. The fact that and by the way, loans to law firms is not a new business. Many law firms have facilities of all sorts. So to say that, and nobody ever said, wait a second, how could you borrow money from a big bank when now the big bank is running the law firm? Nobody says that. So
I say it, but nobody listens to me.
Yeah.
Right. I say, like, if you want my funding agreement in a case, right?
Right.
I just did a UCC search. I'd love to see your line at Wells Fargo.
Right.
And we'd love to see the engagement letter too, right?
Yeah.
We'd love to see
it makes no sense, and so going back to your fundamental questions, I think it actually has gone pretty well. I think that you have a real mix of parties who have ABSs set up at this point. They run the gamut from whether it's an estate planning firm or an accounting firm or a funding firm or whatever. Where it really runs the gamut, and I think the fact that we've not had, I'm not aware of any issues stemming from the fact that somebody is running an ABS.
And has anyone, are there plans to conscript clients and force them to use an Arizona ABS? I'm kidding, right? I mean,
not only am I not aware of it, I'm not sure that's even possible, just technically. So I think it has been a positive, and I'd certainly like to see it expand.
Right. And do you think other states are going to try to do stuff?
I think over time they will. I mean, Puerto Rico, for example, has proposed a framework for it. My sense is that over time, I think some states will do something. I'm guessing. I don't think all states will, but I think some states probably will. But I think it'll take some time. I don't think this is a tomorrow item.
And I think it'll play out. And what I think it'll come to is, is Arizona getting better results from its law firms, right? And it's sort of like system, like has it, like, for example, like, do we think like if KPMG goes in there and, does a lot of work that maybe overlaps with what lawyers were doing for sophisticated clients paying top dollar, like, is there some massive problem we've caused? I mean, probably not, but I guess we'll, I mean, probably not, but I guess we'll find out, right?
Yeah. I mean, let's not lose sight of the fact that the lawyering is still done by licensed lawyers in the applicable jurisdictions. So it's
Yeah,
not like, so what have you really changed, honestly, fundamentally,
right.
you
Right.
know?
All right. So you kind of gave me your biggest misconception. That's one of my loaded questions, but you kind of said that this is sort of unregulated. So I'm going to ask you another question. What is your favorite thing about the business? Because again, like, you could be doing life settlements, lotteries, but you're doing this, you're doing a lot of it. So what's your favorite thing about it?
Um, I guess, and this might be a multi-part answer, but I guess my favorite thing, or one of my favorite things, is that every deal is different.
Mhm.
Every counterparty is different. So you might say, okay, well, a loan to law firm is a loan to law firm, but that's actually not true.
No.
Every law firm has some nuance around it. And then
Mhm.
when you get away from like large firms, which also, all of which, by the way, have nuances because they have multiple
Yeah.
law firms, multiple P&Ls, or
Practice groups and fiefdoms and the variety.
all sorts of things. But in the smaller firms, you have the added dynamic of you're also not dealing with principals who have their own concerns and obligations and personal lives that
Mhm.
are impacted by the financing that their firm takes, and that you may want to address, and so you really have to structure to take into account um, all of these dynamics. So every deal is completely bespoke,
Mhm.
um, and I like that because it really forces um, me to really sit down and think about what would make sense for everybody, right? Because you don't a great deal is where everybody feels that their concerns have been addressed. You've gotten the deal closed. It gotten funded, and whatever the financial pressures were that were being addressed got addressed, right? So, but to do that, you really have to understand what those are. And so I like that every deal is different in that way.
Yeah, and I think some of the people you meet too, you would never have met without working on a lift funding deal, right? And so I think that's kind of an interesting
Well,
piece
that
too.
traveling in esoterics,
Oh yeah, I guess yeah.
you get that across
Right,
asset classes. But
right,
it
right,
is
right.
one of the but you're totally right. That is actually one of the nicest things about the
Yeah.
business too, is just funding esoteric deals. Is that, yes, you get to meet all sorts of interesting people
Well, it's
who've done some
funny.
very interesting things.
Well, my son said to me yesterday, God, you really know like some of the best lawyers in the country for this job. And I said, you're right, I go, but I also know most of the worst ones too. So, kind of, you kind of run the gamut. Okay. Well, here's
Right.
my last one. It's a loaded question, but I'm firing it out.
Fire away.
I do want this to be sort of like a podcast that everybody in the business listens to, but also I do get a lot of people who listen who are trying to get into the business. And so I get a lot of these, what's it like, how's it work? So, um, who would be a good guest for me to try to wrangle onto a future episode of the podcast? It can be a colleague too. It does not have to be, I'm not going to like limit you, but like, who do you think would have like an interesting, perspective to share?
I would say what I haven't seen much of, maybe a little bit, but really not much at all, and I think would be super interesting if you could pull it off, Ted.
With your
Is
help, of course. Yeah,
is
with your
and,
help.
and
Yeah.
I was, by the way, I was about to first say what I thought and then volunteer my help to do it.
Oh, good, good, good,
Uh,
good.
is to get a regulator on
Oh,
the
yeah,
show and to have a
yeah.
discussion. And I would be happy to participate in the discussion around the what I personally think are misconceptions. And we've heard all sorts of things, right? Like litigation funding fuels meritless litigation,
Oh,
litigation funding as a threat to national security, or litigation funding
right.
does not provide access to justice, all sorts of things, none
Yeah,
of which, in my view, are true at all. Um,
yeah.
but they play well sometimes,
They play well. Yeah.
and I would love to have a conversation with a regulator and just um, have just a discussion around their concerns and what we think about them, and why we, maybe some of them have merit, maybe they don't, but just to have a robust conversation about it.
Well, I don't want to act surprised by telling you that's a great idea, because you always have great ideas, but I'm not surprised. So we will work on that. Well, Boris, I really want to thank you, and I'll talk to you soon.
Thank you so much. I appreciate it. Take care. Yep. Bye. Yep.